No, we're waiting to see that market reaction on these numbers from Kering, but certainly it is a stock that is down almost 40% over the past 12 months. And you remember just a month ago, Kering warning that the sales would fall by 10% in Q1, with Gucci particularly being affected with the sales down 20%. But this is what we saw in the numbers, where we had this next level, their next layer of warning, where they're saying that H1 operating profit would plunge between 40 and 45%. And of course, when we talk about Kering, we always talk about Gucci. They make 2/3 of their operating profit, and it is a brand that has been gone out a little bit out of fashion, and they did say in their full year numbers that this was a pivotal moment for the brand and for the group. And now we finally see a reaction on the market, with the shares down 8.5% off the back of this warning from Kering. So while they try to operate this turnaround at Gucci, try to elevate the brand, they brought in a new creative director, they're trying to really shift the strategies there to revive the brand. But there's some concerns about what is happening at Kering at large, because some of their other brands as well are not faring very well. If Saint Laurent down 6% on a comparable basis in Q1, some of their other houses, including McQueen, Balenciaga, also down 6% on a comparable basis. Only Bottega Veneta, which is much, much smaller, is doing a little bit better, with sales up 2%. So certainly they are struggling in turning things around. And of course, there is softer demand for luxury. We know the Chinese consumer hasn't come back buying all those luxury products. But when we saw, for example, at competitor LVMH last week, is that there is still some growth, particularly in North America or in Europe, kind of helping offsetting a little bit of that softness. But we don't see that coming through at Kering and there's other brands. So up until now, the market giving the benefit of the doubt to Kering, saying it will take time to turn around Gucci. But certainly what we heard from Kering is that this turnaround might take a bit longer than expected. H1 will still be difficult. They hope to see H2 to be a little bit better, with some of those new products from the new creative director coming into the stores, and that we're starting to bear fruits there. But certainly we see this latest warning sending some alarm bells on the market, with the Kering shares down now 7.5% on the CAC 40.